Well, this long weekend is going to allow a whole lot of folks out there to peek at their 401k and some of the other stock investments. And, well, many are going to cheer. Others will wonder, though, if it's just too good to be true. I can tell you, I've already heard from a lot of folks via email or social media saying, Charles, I'm thrilled, but this market's got to correct soon. Of course, this potential dilemma is even more frustrating for those without a 401k or any stock investments. For them, the idea of getting in just in time for a big pullback or a correction is frightening. But, I submit that part of that fear is more about ego than their wallets. People have been afraid of getting egg on their face. And because of that, they've actually missed an opportunity of a lifetime. Now, that's really the point, right? When you stop to think about the market like a day at the track, what's going to happen tomorrow, that's not the way you think of it. This is a lifelong endeavor. And when you think about it that way, you'll have a lot less angst about periodic pullbacks or corrections. As for the market, there's no doubt it's changing hands at historically high averages right now. This is, in fact, the best forward PE since 2004, 17.6. But I got to tell you, it isn't significantly above the 25-year average of 15. More importantly, its economic momentum from employment to manufacturing is picking up at an even faster pace than the stock market. Moreover, corporate earnings this season underscore that momentum is not just justifying this rally, but it hints that there's more upside. According to FactSet data, 82% of S&P 500 companies have posted results coming into this past weekend. I want to give you the numbers. 66% have beat on earnings, 53% on revenue. 9 out of 11 sectors have shown faster growth rates since the end of the year last year. More recently, last week, real estate joined that list. This week's earnings are going to give us a glimpse into the consumer spending. Before the opening bell, we got some pivotal names. They include Walmart. Of course, their shares peaked back in January of 2015. It's a stock that's had a series of lower highs. Earnings consensus has drifted. The company really not necessarily a pure proxy for the consumer because of the internet situation there, but it can give us a glimpse of how lower income folks are doing. Then there's Home Depot. That's the monster stock. Closing at an all-time high on Friday. The street's looking for $1.33. It probably needs to beat that, I think, to keep that rally going. Macy's reports, but let's face it, probably underscores the fact that the continued demise in department stores, which, by the way, was reflected in last week's retail sales report, down 3.2%. I don't think that number is going to be great. Watch Cracker Barrel. It could bring some good news to restaurants which have suffered from food deflation. I also think that this stock is a great proxy for American sentiment, which has been soaring. Now, on a different note, today my friend and colleague Brenda Butner passed away after a long battle with cancer. She was just an absolute gem of a human being. Brilliant. She attended Harvard and Oxford on a Rhodes Scholarship. Down to earth, she loved motorcycles and barbecue sauce. She treated everyone with kindness, including me and my family. I will pray for her and her two wonderful daughters. God bless.